the Professional Sentiment Index. So I think this is our last edition here of the quarter as far as Vantage Point University sessions go, and this is, I think, a good time to recap a lot of the sessions we've covered over the last few months, specifically around sentiment, but also if there's some additional questions that might be able to open up the floor and answer any kind of situations you've had questions about over the past few weeks here. So let's just dig into professional sentiment to get started here. And again, if we have some time towards the end of the session, we can kind of open up the floor to markets you're interested in, or just some generalized questions about sort of this suite of Williams indicators, that being professional sentiment, market accumulation, and then percent R, which, as we get into the demo, it's really what I heavily lean on. And I think a lot of these tools complement each other quite well. So of course, we will be talking about markets today, whether those be stocks or ETFs or Forex currency markets. There's never any recommendation to be buying or selling any of the assets that we cover here, and everything is for educational purposes only. So certainly only trade with money you can afford to lose. And I always come back to, you need to develop a process. And certainly that process is going to be something that you have a good understanding of, why you're doing the things that you're doing. And I think, the IntelliScan feature in Vantage Point is really ideal for that. So I actually wanted to spend some time on some of the scanning concepts as well, that hopefully you can, get a thorough understanding of the indicator itself, and then sort of implement, some of these other indicators that can add some context to the trading opportunities that you're able to identify. So just a little introduction. My name is Matt Golden. I've been trading now for over a decade with Vantage Point, and I really just trade all markets. I'm a very technical trader. That doesn't mean I don't sometimes see opportunities I'd like to get involved with, and then use the technicals to trade it. But for the most part, identifying new opportunities, certainly limiting risk, which I think that's the really big part of technical analysis, is helping us frame up the trade. Understand where these trade-offs are opening up in the market. But, I've just been doing this a long time. I love sharing a lot of these techniques and approaches with you. And it's just interesting because, my education is in economics, but I really don't incorporate that into trading decisions, right? I mean, especially when the shorter and shorter term you go, your predictions about what might happen in the world or where things are going might not prove to be very useful, as far as actually putting in positions and limiting the risk on your opportunities. So sometimes the market trades right in line with fundamentals. Other times, it's the market participants may be structured a certain way, and that ends up driving a shorter term move that we see. And so that's what's really important actually about sentiment here, right? So like I mentioned, if the market is sort of primed for a certain behavior, or the market participants are structured a certain way, even you might have good news, right? And the market sells off, or vice versa. And so what sentiment does is, just like it sounds, the Professional Sentiment Index, well, it models the sentiment. Now, we have to really think about, okay, the sentiment of what or who, I think, is a good way to think about it. And if market accumulation, right, the MAI indicator, which you'll see on many of these charts when we go through this, if that's modeling large institutional buying or selling, right, and it takes place over time in some of these long windows, well, I think sentiment really models the more speculative professional traders, right? So much more shorter term, much more reactive to price. And so one thing I always think about is sentiment is a function of price, right? So if you go into the grocery store and a candy bar is $1, well, that's maybe the average price over a period of time. Well, if it goes up to $1.50, you're going to sell a lot less candy bars, right? And people will hold off, wait for things to go on sale. Conversely, if the price goes down to 50 cents, well, not only will people want to buy more candy bars, but they'll have the ability to buy in bulk, right? Or buy higher quantities of candy bars as well. And so we can think about markets and just the volume component to this, right? When things are expensive, from a volume basis, people can't come in and buy, large positions and amounts of it. Whereas when things get cheaper, you get the exact opposite behavior. And so, what we care about is often that imbalance, right? Are there more buyers and more sellers in this volume that's coming in or out of the market? And so sentiment does a really good job of identifying these longer term reversal points. And I say longer term, it's always, you want to be specific on what you mean. I think of the Vantage Point tools are a couple days, right? Neural Index is 2 days. Predicted highs and lows are literally tomorrow or the next day's levels you want to identify. Sentiment, I really think of more of a 1 to 3 week indicator, right? And so the levels that we identify where sentiment comes in on the daily bar can be a very important level for a good amount of subsequent trading that may take place over the next several days or weeks. Um, the indicator as well, of course, is developed by Larry Williams. And so you'll notice when we get into the sessions, I really love this combination of market accumulation and sentiment. It's oftentimes very rare that all of these things come together at the same time. But when they do, they often precede these major trend reversals in the market. So if you're familiar with Larry, I'm sure most of you have come across his work, but he's got a lot of books written. He's still to this day trading hundreds of futures markets contracts a day. So certainly his contributions and really his experience with large funds and with large institutions, that's what his tools are meant to do, is model those groups of traders. And so I think it's very important to just think about the difference that we have here with the technology side of Vantage Point, short-term predictive forecasting, and then say, okay, well, how might we want to pair that with this more longer-term focus on how institutions might be interacting at particular price levels? And so, I've gone over a lot of this already, but just a few notes here. This slideshow isn't very long at all, but like I mentioned, professional sentiment measures the professional traders as a group. So I always think it's helpful to think about what are our models modeling for us, right? What is this meant to explain about the market and whatever phenomenon we're trying to get a hang on. Now, there's a couple different ways where we can use this indicator. There are these rare instances where we see these really major reversal points come through, and that can really focus your attention in the right place at the right time. But as the market proceeds and moves forwards over subsequent weeks, this is where sentiment can be very helpful for taking profit, doing some adjustments as far as the overall position. And I always just think of this of, you may want to be long a market, right? And, look, the appropriate thing is be long, market XYZ or whatever. But that doesn't mean you have to be long the same position size at every given point in the trade, right? And so if there's a situation where it's like, hey, I want to be long this market, but I expect there to be a pullback, right? Or I expect cheaper prices. Well, that's a great opportunity to take some of your profits and just put a limit order in at those lower prices, right? And all that's going to happen is essentially a short-term, or not necessarily a day trade, but it is acting like a day trade where you're just getting out of the market. If you scoot down to those levels over the day or the next week or so, you'll be willing to add back into your position because you want to be long anyway, right? So in these areas where we've already defined, look, if this is a market that for the next several weeks to months, I would want to express this bullish position. It can be helpful to identify those areas where we expect prices to pause, and that can allow us to do some short-term trading or just trade management on this longer-term position that we have in play. So to that point, and actually let me grab my cursor here out. To that point, the indicator can act more like a throttle, right? Letting us know when to be heavier on the position, when to be more aggressive, and when to lighten up. And what's helpful about taking profits and reducing your position is you always get more information as the market trades forward, right? So as we take in more information, maybe we say, okay, yeah, this looks great. We don't want to get away from it. Let's just get that position back on. But anytime we can take off, risk or time in the market, right, that is reducing our risk and exposure to any of this stuff. Now, I think it's helpful to think of sentiment as an overbought, oversold tool, but you don't want to keep that oversimplistic. And I've sort of elaborated on that already, where just because it's overbought doesn't mean we want to sell the market. Just because it's oversold doesn't mean we want to buy the market. But if we can put that in a context and help us with our overall forecasting ability, right, of building a narrow set of expectations that then we can put our positions and really express that position on the market or express that concept that we've identified. So sentiment, like I mentioned, is a function of price, right? So if price goes up, sentiment will likely go lower. You'll see this is just how the indicator works. And oftentimes it's, on those movements lower that you may want to be a buyer, right? If you want to be long anyway, you can use that temporary weakness or, retracements in the market as a short-term sideways periods to establish a bullish or bearish position in line with, again, either your fundamental analysis or purely technical or whatever it is. So I think this is very important as well. As I think of this indicator on a 1 to 15 day cycle here. And we have a really great example of this with United Healthcare. I know we've sort of focused on that with a lot of these sessions, but when you identify a lot of these reversal points in the market with the help of sentiment, you get this. It's the reason why I want to focus in on these situations is because the market performs much more closely to expectations, and that allows you to trade the opportunity more successfully, right? So if a market just breaks out and goes crazy, goes up 40% in 3 days, this is ridiculous. There's no opportunity to trade that, right? You either have the position on or you're just adding more to it, but it's going to quickly be getting away from you. Whereas if you have this situation where you really identify, not only the reversal point, but how this market should trade from that point forward. Well, that's where, obviously, again, if we have a narrow set of expectations, we know what is likely to occur. And that way we can get in front of it, right? And make sure that we're taking advantage of it in the best way possible. So, but you'll notice a lot of periods where, the market trades higher. And the problem is that the market can retrace, right? Goes to an uptrend and then it runs sideways for a while, but you never really know how long that sideways period may last, right? It may just retrace in the first day and then immediately go higher. It may take, a week. It may take 2 to 3 weeks. And so you'll notice that in most of these scenarios where the market is retracing off of a sentiment signal by the 15th day, so by that third week, if you're not moving higher and breaking these levels where we've identified on the chart, then it probably isn't the situation that that you're probably not going to resume higher. So I do have sort of a cutoff for this where past 15 days, I really wouldn't want to be looking at that level where sentiment had breached its 80 or 20 level, creating a signal. Okay, so really the basics here are sentiment in the context of market accumulation, or even some of these longer term trend reversal indicators can indicate these longer term major trend reversals. That's why I call them major trend reversals, because they're not very common, right? So in a single market, maybe you get 2 signals a year where all these conditions come together, market finds a bottom, and then for 2-3 months it might stay in a persistent uptrend here. But if we can set up our scans and really say, okay, well, we're going to really cherry pick and look for the best opportunities and instances where this happens, it's valuable because it's not just the trade for tomorrow, right? It's potentially the trade for tomorrow and several weeks and even months forward into time. You want your focus and energy in that area of the market because you can form a strong directional bias and then use these tools like sentiment and percent R to keep expressing that position. And oftentimes, if we can do that with profits, that's where we can be more aggressive and have less risk to sort of our core capital. Putting on a position, you're always going to have some risk on the trade, but once things move in our favor, there's a lot of variability in how we might want to manage that scenario, especially if we can take some profits and buy at lower price levels. Well, sometimes you might want to buy an even larger position because now you've already caught some of the move and now you're getting in at a short-term discount here. We've got again these profit-taking points, which sentiment can be helpful for. So this is really important, and I'll highlight how we put these things in different contexts. Right? Is this a sentiment signal that is forewarning of one of these major trend reversals, or is this a sentiment signal that is happening within a reversal that's already taken place? I can really identify those shorter term dips in the market. So, what do you want to think of, buy on the dip or a sell on the rally sort of situation? And then just generally here, putting that in the right context is really key here because every sentiment signal isn't the same thing, right? So, we do want to use some other, indicators and tools to try to define what is this sentiment signal telling us about the market and how might our, actual positioning sort of reflect that. Okay, so let's get into the charts here. I don't have a whole lot of, I mean, I can go back to previous months, but there was a lot of positions where I'd, gotten in, caught a nice move, but you just have to cut some of these positions if they're not proceeding like you want them to. But as far as the newer stuff goes, well, we'll start on United Healthcare, and then there's a couple of new things, and then I can pull some more examples from previous. And it might be good to highlight that because there will be these situations where maybe the setup's there for the week, but then you get 3 weeks into time, and that situation's breaking down, and it's fine because you gotten in 3 weeks ago and the market's moved in your direction, but may not have turned into that longer term, sweeping reversal that, would be the best case scenario, right? That's where you make the most amount of money. So United Healthcare, and this is also a good example because we've, covered this over the quarter here. I don't know, how easy to watch some of these previous videos and sessions here, but I'm pretty sure the last time we talked about sentiment was right around here, where sentiment had just gotten bearish, and we can see how the markets progress forward. But I want to walk through this whole example because it's, again, just a useful situation here where we can learn a lot of what should we expect when we see all of these conditions come through. So you'll notice here, and I'll remove %R for a moment here. At the bottom of our chart here, this is the professional sentiment index, right? Williams PSI. And we have a 80 and a 20 level, which we can think about this as modeling extreme bullishness or bearishness in the market among these trading groups. And so we don't really care about when this indicator is floating around in this middle ground. Now, there's different ways you could interpret this indicator, but in a lot of ways, it really works the same way. But for me personally, I really want to focus on where we actually meet these extremes. And it makes perfect sense that as the market goes higher, right, sentiment has this inverse relationship with price. So as price goes higher, sentiment is likely to, as an indicator, just move in this direction towards, its upper or lower bounds here. So very straightforward, just, just there's that trade-off there, that relationship of Pushman lower in price will have a bullish effect on the indicator. But the whole point of Larry's approach here is this is really refined. And so it's not just that perfect sort of trade-off, right? So you see how prices sort of get bullish here, but you really don't get past that barrier, right? So that's what's really important, is actually breaching the barrier and getting above 80 or below 20. And so I think it does a good job as far as, avoiding those areas where it's not really a high quality signal. But let's walk through this United Healthcare example, because there's some kind of quirks here that once you understand them, it makes it a lot easier to know, hey, what is this signal telling me? Should I be responding to this signal, or should I be just completely ignoring this sentiment signal, or moving above 80 or below 20? So if we bring this down to our medium term, I know we do have a sentiment level had gotten bullish here, but we never got our crossovers or anything like that. And another problem would have been that we've been right before earnings, so not great to put on a position, especially a longer term position, and have to deal with earnings when you don't have a lot of profit in the market yet. But what we can do is actually run scans and make sure that we actually look at these things when these fresh sentiment levels are coming through. So one of the first scans that I run when I do my nightly analysis is the triple cross being bearish and sentiment having a 1-day close above that 80 condition. As you get more experience with identifying these reversals as well, you often notice this sort of behavior too, a very strong sort of 3-step drop into that bullish sentiment level. And so being through earnings and, depending on how we want to approach this, but we, get this situation again where sentiment on 8/1, right at the beginning of a month as well, gets bullish here. And so whenever I see a bullish sentiment level, really a bearish one, bullish one, regardless, sentiment crosses 80 or below 20, I want to put a line there. And the reason for that line is because depending on your trading, even if you're just doing short-term trading, that level is going to be fairly important here, right? The market tends to find support at that price level. You can even see back here when sentiment got bullish back here, you'll notice that the market bounces off that level, comes back into it, and it takes, up until the earnings report to actually then create another catalyst and the market price got driven lower. But again, anytime sentiment reaches that level, I tend to think of it as it's an end of day signal, right? So what's happening is the price action, whatever the close was enough to get that sentiment level above or below 20. And that isn't just relevant for tomorrow's trading day. It's relevant for, a good period of time moving forward. And so if we have a situation where sentiment's getting bullish, and we're also seeing accumulation, and usually this would, be something that would come in line with your, predicted moving average crossovers here. So you see that we have this bullish sentiment level. We have not the best accumulation, but we can go through more examples of this. But you do have this divergence being created. I mean, it really started back here where prices are bottoming out, running flat, and something's going on here as far as that accumulation process. And so the point of this is to say, hey, how can we tie in what's potentially accumulation happening in the market and better time that with the use of these sentiment signals? And so if we combine all this and say, okay, if we can trade in line with market accumulation, wait for these sentiment signals, and then wait for Vantage Point to give us the go ahead, well, we've got really everything on our side, right? Trend, a recent sentiment signal, that longer term accumulation, and that can be good for, longer term swing or position trades. And so when you have a situation where all of these things come together at the same time, and I would I'd make that line wide and green. And really the language that I use to myself over a period like this would be, there's no reason on earth to be short this market below, in this case, 237.77, right? Because it's kind of saying, look, we've got a 1 to 15 day indicator bullish. We've got a longer term accumulation, which is really like a 1 to 3 month directional bias indicator on the market. And now Vantage Point is giving us the go ahead. Now, a lot of these situations, I'll start trading just as soon as the neural index gets bullish. And you actually see, if you look really clear here, look at how the market responds in the very, very short term. Now, mind you, I mean, we're looking really short term here, but look how the market responds here from the sentiment level, right? You got your level right here. The neural index goes bullish on after this trading day, and notice how market gets very close to that level, right? And you know that, okay, well, all the conditions are bullish here now. We've got a lot of support right here at this level. And depending, again, on how aggressive you want to be, that can be where you start accumulating a position. Now, you can always, add to that position as more and more signals, start to come through. You may want to determine that, I'm going to wait for a medium-term crossover. And, this is where within the IntelliScan, we can, use that look back period for sentiments, that days since above threshold. We can set the crossover to be a fresh 1 day old crossover, bullish, and that days since above threshold, I usually set it to less than or equal to 10, and it'll make sure that accompanying this fresh crossover, there's been a bullish sentiment level at least within the last 10 trading days. So if we can use that to identify where the potential bottom is, and then tie that in with the timing tools, sort of the here and now short-term forecasting of Vantage Point, that can identify these nice entry points. So to that, just kind of explaining that concept again here, I think Lucid Group, we looked at this last week as well. And again, let me just highlight, what this looks like depending on what crossovers and things that you look for. But, as far as the scanning goes, triple cross is still bearish. We know that the market will still be in a downtrend when these fresh sentiment levels come through. And so you can identify this and say, okay, there's a fresh sentiment level. It looks like something's going on with accumulation here, but we may want to wait until we actually get a bullish sentiment or a bullish neural index. So we can tie that into scans as well and say, okay, well, now our 48-hour indicator from the neural index is bullish. We have this recent sentiment, and we can see after this trading day, we'll bring up our short-term cross to get a sense of it. This also would have triggered on a short-term cross to the upside. We can see, hey, there is pretty good accumulation here, right? Prices have gone lower from close to close if we combine these two periods of time, but they're actually higher on many of these time periods as well. Even if we come back to, even all the way back here, those close prices, you see that price is definitely lower, but accumulation is creating that divergence. So in this instance, again, that creates a level right here on this close of 1766. And so now going into the market the next trading day, we can say, okay, well, we can start buying this market. We can, of course, use things like the Vantage Point predicted highs and lows to help us with this time period, but also just this green line becomes very relevant. And you see how this really all came together on that next trading day, where their close was 1766. The predicted low was 1767, and the actual low was 1765. So if you do these sorts of scans and get all this on your window, I mean, during the trading day, I mean, that just screams at you as a nice opportunity to get a position on, and we can just walk that forward, see how we might want to manage the opportunity. But that again is just basic reversal scanning. It's not going to work 100%, but the point is that when we can especially combine the shorter term tools here to help navigate it, this is where big asymmetries are opening up in the market. So just like United Healthcare, if we go back, we can see that now, well, sure enough, right? These longer term asymmetries as far as how much up move relative to, we can run our stop losses really just using that green line if we want, or just, a 2 ATR stop or whatever volatility metrics we want to use to rein in the risk here and know that this situation has the potential for more aggressive upside. Now, once the market had made this move, and this is actually the Warren Buffett announcement, and you see how there's just no sellers in the market after that announcement gets made. Well, you see that market price goes higher and sentiment gets bearish. So I usually I pay attention to the close price. So in this case, you see sentiment actually gets bearish here on the close price of 299.84. And so to annotate my charts, and you can do this on your live charts on your platform as well, is I'd put a red line here, but I'd make it skinny. And the reason that I do that is because it's like, I know I've got more upward pressure here, but now we're getting a downward pressure signal, right? So I know that this is where the market's likely to go into a retracement phase and run sideways. And probably lose that momentum that we were seeing on the upside. And you see, sure enough, what happens here is, again, the combination of those forces, where now we're seeing the sellers come into the market 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So you see, it wasn't until really the 12th or 13th day that then we get that next movement to new highs, breaking the previous highs that we'd seen on the chart, and takes us up another notch here. But not every situation is exactly the same way here, but it's very helpful, I think, to know that, hey, if you're trading United Healthcare, especially short term, or, going in and doing day trading and things like that, you have to understand is like, this is probably going to, run sideways. And really the level that gets on your radar is the triple cross, because this is exactly the type of situation where the market will retrace, find its support down here at the triple cross before making its move higher. You just have to really be aware that you tend to get this sort of behavior where the market just runs and runs and runs, and all while it's running, this is getting higher and higher and higher. So it's almost like that support is getting higher and higher and higher. In this case, you see they didn't come together, but oftentimes, they'll meet together, and then you'll get that next movement higher. So when you're, again, thinking about, hey, do I want to keep trading this? Do I want to add to my position? Or just, holding your position? Well, this is where these tools are very helpful, because not only do you know that weakness is coming in, but what's really helpful about this is notice that accumulation keeps building. So even as prices run sideways, that accumulation process is happening. And sure enough, you want to be around for that next move to new highs. Now, this is where things get a little, not really tricky, but just experience really helps, because this is a perfect example of how markets come out of reversals. Is you get the real strong move, retracement, and then the second part of the move. And I always argue that the second part of this move is typically the most aggressive. We'll see what we get here, but you could develop trading strategies that look for this sort of momentum and accumulation, and just make sure you can identify that reversal point and put it in the right context. But why I want to draw some attention to this is just that once you get that first move and you get that retracement period, you can't really rely on sentiment all that much moving forward, because once you've come through the first part of the move, this is where high momentum, you expect it to heat up. So I generally am going to just discount, like you see, we get another bearish sentiment level. But when we put it in this context of knowing we just went through the retracement phase, right? So now on this move higher, yeah, we're getting another bearish sentiment, but we wouldn't want to really respond to that signal and for our longer term trading, right? This is just saying, look, here we're starting to move higher. Don't look at this as a profit taking point or really a retracement phase. And so when I get in those scenarios, what I do is just say, well, this is where you want to use percent R, because now we're in that third part of the move, higher momentum phase. I mean, we'd gotten into it here, but again, this is just an experience thing that I just tend to notice that, that's a good sign for that persistent momentum. I mean, you see that percent R stays above 80 until most recently it had what we call those buying days where you came out, and then the next trading day is a day you'd want to buy. But especially once you've gone through the retracement phase and found new highs, that's when percent R becomes really the main tool, where you just say, look, we're in that highest momentum part of the move. If anything, we just want to buy at predicted lows, target predicted highs. And then you see here, this would have been a buying day where you come out of the area, means the next day is the buying day. You do want to, you can always scoot down to the triple there, but you see that that's really the day you want to get a position on, because within 48 hours we're going to start going higher again and continuing on to that trend. So that is the general format that I often look for. You get these really nice asymmetries, these nice trade-offs as far as how much you have to risk. You can of course use shorter term tools, your live charts, and monitor these things as closely as you like. Yeah, so we'll see if this keeps moving forward. At this point, you just look at this market, and it's just all you can say is you're in high momentum. Right? You've gone through the first phase, gone through the first retracement, and now you just want to keep things simple of there's still accumulation. We've got that momentum, buy at predicted lows, target predicted highs, and just keep exploiting the bullish side of the market. And, that's a lot easier to do and be aggressive if, you're already up, 30+% on the move, right? It really opens up how aggressive you might want to be with those profits, knowing that you've got something that's working here. Now, Lucid Group, so this is, again, just another example here of that reversal condition. And you see that now we're sort of in an interesting spot with Lucid, because sentiment gets bearish here. We've never had any pullbacks to the triple cross here, right? So you have to be aware of that as a trader, is you could still very much move back, towards the triple. And so if you're participating in something like this, you really don't want stops just hanging around in here if you're looking for that longer term move. And it certainly looks like, this still has more room to go. There's plenty of accumulation, but you just have to be aware of those levels and trade-offs. And oftentimes the market in this case might come back to, this sentiment level, and, which would coincide with the triple here down a little bit above $20 a share. But you see, you're also getting percent R getting into that high momentum phase, and you're seeing, again, prices just, continue higher. Now, clearly here, again, all you'd want to do is go long and take profits on longs. So, every scenario is going to be different, but from this point forward, you know that, hey, this is an area to focus on, and let's, only exploit the bullish side of the market and use some of these tools to, potentially take some profits along the way. Now, you'll notice, actually, this is a good example too, is if sentiment gets bearish there and the market finds support at the triple, how much room do you have to, capitalize on a movement lower? Right. So, I mean, the market is, only a couple percent from that triple cross support anyway. So that's where you can think about that trade-off is, hey, do I want to try to get out and get back in at lower prices, or just, stay long and look for that bigger move? The risk, of course, is you don't want to get out of the market and it continues higher. But, again, that's different scenarios are going to play out a little bit differently. But for the most part, I'll take some of my profit when sentiment gets bearish and leave at least some of that position for that longer term move, to play out. Especially in scenarios like this. Like I said, if it's going to retrace and go to the triple, how much is that really saving you, or a good management to do, if you can't really make much money or save much money on the move. Also, what's helpful to do is just this confluence of a bearish sentiment level and the next day's predicted high. So, looking towards that level, whatever the predicted high of 2099 as being a level where you'd look to take some profit, right? And it's just really a combination of saying, look, I know the bullish momentum's here. We are getting this conflict. So if I'm at an intraday predicted high, then that may be where I, want to take some short-term profits and, reevaluate the situation and see what's going on and how you want to keep managing that opportunity moving forward. So on Lucid Group today, I mean, what happened here is you see that %R got bullish. That's that high momentum scenario. And then we came into this morning, this predicted low. So it was a predicted low of 2190. We hit 2191. And now the market, was breaking out again last time that I looked at it here. So let me see here. Actually, now it's 23.28. So it's up almost 5% here today. Now CleanSpark. So this is another. It's a different kind of scenario. But I'd mentioned this actually in my weekend video. There's different ways we can utilize these indicators and tools. First and foremost, though, I really like accumulation. Right, that's going to be where the bigger move is likely to take the market. And when we have the shorter term tools that we can pair that with, well, we can limit the risk and, potentially take some shots where we see the, appropriate conditions lining up. But this is actually a decent example of a take profit point on sentiment and how this just combination of the indicators work. So this is something where, I know we're not talking about %R today, but if you come out of the area, you shouldn't break that high. And this creates these situations where you either just momentum just break right through that level, or you get a couple of days of pullback, which, also represent an area where, again, you'd only want to get long in the combination with that accumulation on the chart here. And you see how the predicted lows do a good job of pointing out, hey, if we get that 2-day pullback because you broke the high, look down towards these predicted levels, and that'd be a good place to exploit the bullishness. Once %R gets above 80 here, you see just that really the strongest form of momentum really comes in and takes place in the market here. But more recently, you see sentiment got bearish here. And so, if you're able to get long there, again, this can stand as a point to take some of your profits, start to, do some trading around this price level. And you see, again, how this works in combination with the next day's predicted highs. And so if you're in a market like this and still on the bullish side and you've got your take profit point at that subsequent predicted high, you see how choppy it works here where, if you're actually just waiting there, you actually get filled at the open here and then start to sell off. So when I look at CleanSpark now, it's been a really tremendous move, but it does look like you're potentially in a retracement period, right? Where sentiment's bearish right here. We've got a lot of distance from the triple cross, huge amount of distance in this case. And so again, today, the market gapped up like 10%, but then it started to come lower and now you're down at below this predicted high. I believe still, you're at 1423. So again, it went up to these predicted levels in this retracement period and it's selling off from those levels. So this is, again, as a trader, you just got to be real careful because you've got a huge amount of distance here where if you go into a, longer term retracement, well, you may have that, accumulation or the triple cross go higher, but the market, see a lot of volatility inside of these windows. So, you always have to think about what you're, why you're in the market and what you're trying to exploit. But again, knowing directional bias from market accumulation and then using, again, either %R or the PSI to really decide on how you want to, navigate that opportunity. Regeneron here. So this was a example from a couple of weeks ago now, but this gets on the radar because of this right here, right? So 554, all these conditions get bullish. You see the neural index is already bullish. And so, this is where I'll use, kind of my live charts and short-term momentum to just get long. Because again, this is likely where if it's going to reverse, that's where that will set in. And so we had a big drop yesterday, but, we still haven't gotten back to really these entries down here at, 560. So you see how it still offers a very good, signal to say, hey, look in this area, trade in line with that accumulation and exploit the bullish side, only go long, taking profit on long positions. Procter & Gamble. So this was a position from a while ago, but I had to just cut this. So this is really where this starts, right? So you get a bullish sentiment level. You have what looks to be good accumulation in the market. We got this really nice push higher. And so I was on the bullish side until sentiment got bearish. In this case, I really just took all my profits because I had a lot of other positioning on in the market. So it's like, look, just get out of this. We can always get back in if prices go lower. And so again, that set up this situation where we came right down into the triple. So then just offered another opportunity to buy with those profits, start exploiting the bullish side again. And this is a good example of the time frame of how things need to work. So here you see that sentiment gets bearish. Remember, we have a 1 to 15-day time frame. And what that means is if we go into a retracement period, if we're not trading back at this level by the 15th day and going right through it, then we've got a problem and we need to tighten up stops and reduce risk. And so again, you see here that 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. By this point, we need to go higher. And if we're not, I'll just get out of my position, right? So I'll keep the money from this point, buy back in at this level, and just cut the position and get out of the way, because it needs to be finding new highs and trading out from that level. And so how I think about it as well is like once you get through the retracement period, we shouldn't be retracing again, right? We should find its support, go higher, and we should really start progressing higher. Even the fact that we came back in again was like, okay, that's not really what you want to see. And you see, sure enough, that this eventually fizzles out and goes lower. Now we see that bearish momentum in the market. But what's important is, of course, recognizing this all back here, right? That's where the trading starts in line with the sentiment signal. And then this is where the trade management comes in of taking profit and buying back in at cheaper price levels. And every situation is just going to be a little bit different. What I'll often do is just set alerts in my broker for when we start moving down towards the triple. So I can buy something like this and forget about it and know, hey, if we get back down to those levels, then you might want to take another look at it and start exploiting the bullish side again. So, so Bill here says, as a swing trader, do you rely more on sentiment? With indicators, it's not really more or less. It's using the tool when it's in the right context. So in a way, I think about, when I set up my trading systems, there's two kind of basic concepts here, right? One is I want to trade the best crossovers, right? So when there's a vantage point crossover, the start of a new swing, let's call it, I want a way to filter out what are the best situations like that, right? So, where you see this crossover happens here, but there's no sentiment level to go along with it. So immediately this would rank lower than this crossover as far as an opportunity. And the same thing here, right? This crossover, I understand it's not even a reversal crossover. It's the pullback situation, right? So it's just, this should stay bullish and we should keep going higher here and continue on the trend. But I know that the context it's in, right? I know that this is the reversal point. This is the retracement, and this is hopefully the continuation of a longer term trend. And so again, when you start to see this stuff break down, look, well, that's not really what it should be, right? This is get way too far from the retracement point. We're seeing those vantage point tools go bearish, and it's just sending you more of the signals that say reduce positioning, get out of the way. Whereas like Lucid Group, again, like why is this a high ranking medium term crossover? Right? Because it has its recent sentiment signal, it has accumulation. So this looks a lot better than that crossover to me, or this, or any of these crossovers, because the last thing that you want is to be trading crossovers that do things like this, right? That, it looks good for a few days, but then, you're very quickly, that momentum's coming out of the market and moving back towards your entry price. I don't care if the market moves back towards my entry price, but how fast does it do that, right? Am I able to recognize, hey, I need to get defensive or tighten up stops here? Or is it a situation that's just, not supported at all and is just going to, be volatile and shake around so much that there's not the chance to get in that profitable position at least, right? Before, it's starting to turn on me. So another way to just think about it is it's like, these situations where all these conditions come can lead to these big reversals, but I don't make assumptions that that's what will occur, right? I'm still going to use my tools to manage the situation going forward through time and always be very defensive with the profits that I've been able to pull out of a market. Now, obviously, the best situations are where, you put on that position and 2, 3 months later, you get this huge sweeping move. You don't need a huge position size to make a good amount of money on those situations. And you also don't need to micromanage the thing to death, right? If you get a good position, you can leave that as sort of your core position, capturing that bigger move, and you can decide, how much you want to risk trading around it or adding to the position over that, course of events and a period of time. But I just think what's helpful as well is it helps you get your attention in the right places at the right time. So, it's like, where's my attention? Well, it's on Lucid Group, United Healthcare, Regeneron. I mean, this may get stopped out here, but the point being is you want to identify these things at the right time. And again, they may not turn into those big sweeping reversals, but if I, identify them at the right time and manage the position appropriately, even when I don't get what I want out of the market, I'll break even or lose very little. And when things really work out, there's your asymmetry, right? When things really work out, you make a lot. When they don't work out, you're losing nothing, or losing a little, or in some instances, maybe even coming out ahead in the trade. Now that, requires some very good trade management, but sometimes it happens where, you take profit on half your position, bring the other half to break even, and, it ends up stopping you out, but you still kept the half, that you'd made on the way up and broke even on the second half. But again, a lot of this stuff is just, it's different, right? Not every scenario is going to be the same. And I mean, that's what trading is in a lot of ways, is dealing with, uncertainty. Now, I'm a little cautious here broadly on the market, because you'll see here, if we look at the Qs, there is a fresh sentiment level. So again, this combination of just, I mean, we could think of it as the combination of a sentiment level and a bearish neural index is short-term weakness. Like it's just a strong short-term weak signal, right? So that can lead to, big major reversals. It's certainly the first thing you see as those reversals take hold. But just today, again, is, we've got this level here at the close of 602.20. So we could easily just say with our language, the market's gonna have a difficult time above 602 on the Qs. And we've got a bearish neural index over the next 48 hours. And we've had this persistence of just, accumulation not keeping up here. So, you have prices going higher and accumulation certainly sideways here. So certainly a warning signal here that, hey, you want to be a bit more cautious here, just about the broader market. And so we have seen dollars perked up a little. Euro was down a bit. Yen's down quite a bit, almost 1% here. You see gold down. So you're seeing the dollar perk up here. Crude oil prices perk up. So this was, I'd gotten out of this, but here's a good example as well. We talked about this last week. That's not it. There's so many symbols that get confused after a while. So here's Coterra Energy, and you'll see how this plays out sometimes. This is where, when you're kind of familiar with how these levels come through and can do the trade management around the levels, well, you're going to be on a better cycle with the market as far as it moving up when you're paying attention there. So this is something I got in very early, really on this next trading day. So as soon as the market opened, all these conditions were bullish. We had short-term, very short-term momentum. I look for on my hourly candles and the Ichimoku cloud. Says, okay, well, we can get involved here. There's accumulation picking up. Here you see sentiment goes bearish, and it's another good example of how long these things should last. And if they don't last, I just get out of the way. So there's your bearish sentiment level. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So I think I mentioned that if this thing broke this low, right? I'm using a combination of tools here, but here's percent R came out of this area here, meaning next day is the buying day, and we shouldn't trade past that low on the chart, which is 24.19. So as far as how the trade management works, this went, exactly like you'd expect it to for quite a while here, right? We moved up higher, sentiment gets bearish, so you take profit, you buy back in down at 24 with those profits, and then, we got to this point where, now I can put my stop at really where I bought back in that second position. I was even a little bit higher there because I just need to be outside the low. And you see how the combination of these models work, right? This is either going to retrace here and then go into its next part of the move, and momentum should persist. If it doesn't, I want to be out. And you see that, well, certainly that's how that played out there, right? So, you run the risk of a lot of things happening. We could have traded higher and then just immediately gone lower. But if I take some profit and buy back at lower levels, I'll likely recognize that, hey, let's not get behind on this trade here and just get out of the way. It's interesting that we see that, here's your original level where all this lined up. And sure enough, that's where the market's bouncing, and we're seeing, crude oil bounce again. And you even see another sentiment level came in. The sentiment gets bullish again. And that's, again, where you're seeing the market bounce in this instance. So, I'm not participating anymore here, but, it just kind of walks you through how that plays out just by following the indicators and the sort of logic and rules you've set up. So what else was there? So, there's been a lot of it. I mean, the last couple months have been kind of chippy here where, things work and, they end up stopping out, and then I just, get out of the way. But in all these scenarios, the market moves at least enough to get you ahead in the position and tighten up your stops to break even. This really worked out. And, this is where all these conditions come together of sentiment. And again, from the trade management, this worked out pretty perfectly as well, where sentiment got bearish right here, right? So based on everything we've discussed here, what's the expectation if we've just come out of a reversal and market's made a decent move and sentiment gets bearish there? Well, what's the expectation is take some profit and try to buy back in at the triple cross. So this is a really cheap price stock. So, even a penny move here is, adds up. But, you take profit, even if you were, had some more optimistic profit targets like the predicted high, you're going to get out of the market. And then whatever you've taken out, you can buy back in at lower price levels. So you see how another way, I use a lot of just simple language to guide my, whatever action I'm going to take in the market. And so the logic here is just, look, you're getting long here, and this is where volatility is going to come in, because you've got that confluence of factors. You only want to go long, but that this is where the bearishness is going to set in here. And so, you're going to get that shaking around here. And that's why it's good to look towards that period to do the trade management. Take your profits, try to buy back in at lower levels. And so sure enough, I just added back in at the triple, and we got, this, enormous move. Now, by the time we got up there, you see accumulations coming out of the market. And so it looks like this is something you would just get out of the way, right? So, really nice, even if we're still in the market here, you've still gotten quite a really strong move there, right? So that's really, for the past couple months here, that's really where the profits have been driven. And a lot of the other things are just, little gains here and there, and just, but you make a lot of money when you catch these reversals and see these, a lot of them working out. And you're able to add to those positions because they're working out. That's the other thing, is that when markets are performing to your expectations, that's where you can add to those positions and get more aggressive. But if they don't reach that second layer of the move, sort of like, United Healthcare, we're in that second part of the move, great. But, had we gotten up to the sentiment here and then started to go lower, well, there's no way to add to that position and get aggressive on it, because it's not meeting the expectations that have been set. So, I mean, I'm getting into a lot of kind of longer term strategies of how I like to trade, but it's all just linked to, sentiment. And so even if you're not using accumulation or, whatever tools you're using, you may just want to understand, look, even if you don't think about the long term here, right? Just think of this 1 to 15 day level that sentiment comes in. And you just want to make sure that you put that in a context and know that, hey, if that signal is met, what should I expect out of the next 1 to 15 days of trading, right? Because you don't want to be in an environment where you're expecting a breakout and not recognizing that, hey, sentiment's bearish here, right? And it gets difficult because there's no way to perfectly time this, right? I mean, these retracements, they can last a long period of time. And if you don't know what's going on, you're more likely to get kicked out of your position, or when it does, aggressively move down to the triple, you're selling that position when it's, nothing's really happening. It's just retracing, and then it's going to find, its support and the rest of the move. But if you're looking at things in such a short-term window and you don't put it in the proper context, you may confuse, temporary weakness for selling when that really isn't how you want to be thinking about the market. I mean, if anything, you might want to be buying on that weakness, right? Um, so again, just ways to take sentiment, and then regardless of your trading strategy, put it in a context, so that you can again narrow those expectations as far as what you think is going to occur in the market. So let me see here. Progress software. Yeah, so that was a dumper here, Progress. So we can take a look at this again. All right, so where did this start here? Oops, oh, so this would have been back here is where this would get on the radar. Or let me scroll this back so I can see what it looks like on the. So I would have likely got into this after earnings here, right? So, this is where the level comes together. We would have had a short-term cross here. So I don't know exactly where I got into this, but I probably bought at the green level line. But I didn't stay in this for very long at all. And so, yeah, if I bought in at this green line, I probably am tightening up stops pretty aggressively here. Also, you see we have percent R. So if percent R comes out of the area, I know that there's your breakout condition. And how I would look at this is if we pull back, you should only pull that back for 2 days and then continue on the up move. So again, this is more probably a percent R of what gets me away from this. But yeah, so in this case, I don't know exactly what occurred here, but this wouldn't have been one of the winning positions, that's for sure. But I think I just tightened up stops, pretty close to break even at this green line. But that may just be a loser as far as the positioning goes. There was another opportunity here. I'm trying to think back because there were so many different things that had come through over this time period. Oh yeah, I'm so silly. That's why I was so confused by what the heck happened in there. Okay. Yeah, this was back here. Okay. Yeah, this is it. Yeah, so this is what's funny is a lot of these sentiment signals came in all at the same time. So I remember I just generally reduced exposure. So, I had, my entire book full of positions, got a lot of bearish sentiment levels, and then so was automatically cutting down the positions regardless when these sentiment levels got bearish. So right here. But yeah, so this is another good example of just the concept here, right? So there's our level where all the conditions come together. Here you see you're getting that support at that green line level, so you can get a really nice entry potentially, depending on where you get in, it's always going to be a little bit different. But once you get to this level, sentiment's bearish and you should look for a retracement or pullback. So again, about a 4 or 5% move there. And the problem is really the response at the triple. So this is a good example of when sentiment goes bearish, and thank you for reminding me of this because this is pretty important too. If you're buying in because of all these conditions and accumulation picking up, when sentiment gets bearish, you really want to be above the triple cross, right? Because the triple cross should be acting as support for the next move higher. So when you're not only not finding support there, but going back lower, and you see now the triple cross is still bearish even after almost a month of trading. Again, a good sign, just cut the position, get out of the way, wait for something new to open up here. So we may see, if this gets another sentiment level, we got earnings coming up here, if accumulation picks up, these things may come through the scan again and warrant getting right back into a position. I know someone asked about Lithium Corp. This is just a there's just an announcement. I think the White House said it was going to do an Intel or something on this, and it shot up like 50% or something like that. It is on a buying day on percent R, right? To come out of the area, making today the buying day. There's some accumulation, but again, the news-driven stuff is not really, you can't really expect to trade that over time and take advantage of opportunities like that. I'm trying to think what else there was. There's been, again, so many opportunities come through, and you just spread out the exposure here and try to lean into where things look the best. But I think, yeah, we're kind of getting to the end of the time here. I'm running out of time here. So I'll leave it there for today. Again, hopefully this is kind of helpful. The big thing is really recognizing these opportunities at the right time. And so with what you understand about sentiment, I'll be really brief here, but let's just go over this real quick. Is you can take the sentiment index, and it's already here, but you see how you get plenty of columns here that can help you sort different types of sentiment signals. So if you wanted to see the fresh signals that are coming through, and mind you, I mean, I set up scans with the understanding that it's like we're dealing with all this fresh data, and we have to see these signals right as they come through. Every single night, new data comes in. We don't know where the great opportunities are going to be, but if we have literally hundreds of markets to choose from, we really want to lean into the right place at the right time. But if we're not right on the edge of that and seeing these things right as they occur, we're almost bound to be behind it, get inferior prices, and have problems with this. So, if we say days above threshold, if we set that to equal 1, that makes sure you see these fresh signals right as they come through, whenever a fresh sentiment level comes through. And then what we can do is combine things like the crossovers, right? Set a 1-day crossover to the upside. And that's where you can use these, days since above threshold. So you can set a look back period and say, okay, well, what we're scanning for today is the crossover, right? The fresh crossover is happening now, but we want a recent sentiment level, right? Because what's going to happen is when the market bottoms, that's where sentiment will produce its signal, right? When it's selling off, you're not going to have a medium-term cross to the upside, right? We need to see the market actually start to turn and support that signal. And so again, this is just what allows you, and you got to just sit down and experiment with this. I remember, when I first started developing a lot of these ideas, a lot of times you set up a scan, you sort through the data, you want to make sure it's doing the right thing, it's pulling out the right data, and then you just get these things saved so that, you know what you're doing every night, how you're going to push through this data. Sometimes you'll look at a lot of charts and there won't be anything, right? A lot of these markets are correlated too. So you notice that you'll get weeks where nothing really is coming through, and then, 2-3 day period where there's a ton of these reversal signals, maybe with sentiment coming in one day or the next day, then these crossovers coming through. But if you're not, setting up the scan and doing it every single day, even through those days that it's not producing anything, you're just going to be bound to miss things when, they're really lining up well, and you can identify those big asymmetries that you might want to trade. But again, there's no real guarantee to when those happen. They often happen at, sometimes the least expected points, when the market's selling off, right? That's when all these reversal signals come through. And then the same thing with, if you want to find those markets, kind of like United Healthcare, right? You can set, day cents below threshold equal 1 and set the triple cross to bullish, right? So you'll see markets that are already in those uptrends, but getting those temporary weakness signals coming through so that you can be ahead of it to buy on the dip. Maybe you buy 2 or 3 days later, maybe it's a week or 2 later that you're buying on that dip for the next move higher. And actually, the longer you wait on those retracements, you get more information from accumulation, right? So if the market's dipping down slowly and accumulation still building, those are usually the best, buy on the dip scenarios. So depending on what you want to focus on, you just got to think through of the logic and make sure that your scan also isn't filtering out a lot of things that you may want to see and may be valuable information. I tend to keep things real broad, and then you can always start to narrow from there. But if you put so many criteria in your scan that it kicks out a lot of things, then you may just filter out the market that you actually wanted to see by putting in too many filter criteria. So have a great rest of your day. We'll of course start the new quarter next week. So be well, have a great week, and thanks again, and bye for now, everyone.
Hello, everyone. Once again, this is Tyler, your moderator. I just want to thank you so much for